Hi, everyone. I am Karen Toulon here at Bloomberg's world headquarters in New York, actually literally on the fifth floor in our newsroom. And welcome to Black in Focus. I'm talking today with Steve Boland. He is president retail at Bank of America. Welcome, Steve.
Karen, thanks. Good to be here with you.
So president of retail. So let's kind of break that down a little bit. So ultimately, you're responsible for all of Bank of America's 33 million retail banking customers, right? And so that means that's shorthand for mortgages, auto loans, credit cards, all of those customers, right? Tell us what you do.
Sure, that's right. So, we have the largest retail bank in the country. As you said, 33 million clients. And, as importantly, it's our position in each of our local markets with those clients. I'm pretty proud of our position, which is in the top. We are number 1, 2, or 3 in 25 of the top 30 markets in the country in terms of deposit share. We've got over 40 million digitally active users, and we're serving those clients, as you said, across all the solution sets, across all of our capabilities, both digitally and physically, of course, in our financial center network.
Wow. And so ultimately, for people who may not know this, the might of the American consumer, that's 70% of the U.S. economy, right? And this is a massive market. And so all of those clients, all of those deposits, all of those people, all of those livelihoods and homes and cars and everything that ultimately you're responsible for, all of this comes at the same time that we're in the midst of such a great kind of life transformation and economic transformation. It's kind of been playing out kind of behind me. A couple of months ago, there would have been no one here. Right now, there are people. We're populated. Depending upon where you live in the United States and what business you're in, life is returning a little bit back to normal. But for your 33 million clients, some are thriving. Some who used to be thriving are not, and then they're the historically underserved. When you think about the great American consumer and the American customer and client, what worries you? What kind of keeps you up at night when you think about how you can best serve them and therefore serve the U.S. economy?
Sure. Well, look, you've stated the obvious. We've come through a pretty difficult time over the last year plus. And really, when I think about what our role was and where we need to have our focus, it was both about all of those clients as well as all of our people. So if you kind of just go back for a second, Karen, we have over 200,000 employees, the vast majority of which had to start working from home. And we had to make sure that we could support them. And so that was making sure that they had, for those of our employee bases that were working in our financial centers, which were essential workers, had to be there for our clients, making sure that they had child and adult care support. We, established enhanced overtime, made sure our financial centers were safe with PPE and the appropriate barriers. So we had a lot of work that we had to do, and then enabling our folks that were working from home with capabilities. When you think about our clients, well, gosh, it's, think about in small business, we did almost 500,000 paycheck protection loans for some $35 billion to help our small business owner clients who needed help bridging through this health crisis. And we really focused on the smallest of those clients. 80% of our loans went to businesses with less than 10 or less employees. About 30-40% were done in low and moderate income and majority minority communities. And then you think about the actual consumer. At the beginning of the crisis, the first thing we said was, let's give them relief. And so we set up very easily from a mobile device where they could apply for a deferral for their loans. I think in credit card, we had 1.7 million payments deferred for our clients. But here's now the silver lining to your question. I look at that today, that's 9,000. So a lot of those clients, to your point, have gotten to the other side. What I think about today I've got to make sure that those clients have access to all of our capabilities. We've invested for years in our digital capabilities. That was turned out to be critical during the crisis when physically clients either couldn't or weren't comfortable coming in, that they still had the ability to access all of our solutions, all of our capabilities, all of our people. That was really important. We're continuing to invest in solutions, and we can talk about the various solutions we offer for the mass market clients in terms of the types of accounts, the types of loans and capabilities we make available to them, and continuing to make sure that we have a focus on not leaving anyone behind. The unbanked and underbanked, and I think more about the underbanked because the unbanked is getting smaller and smaller, but the underbanked, those who have 1 foot into the financial system and 1 foot outside, making sure that we've got solutions and capabilities to support them.
You sound, and I mean this in a really good way, not in a naive way, but you sound almost optimistic. And I guess I say that because I tend to be that way as well. I like to, in every problem, I think that they're just opportunities. Let's talk about those opportunities, because I think that they are there. I mean, because otherwise we give up, right? The racial wealth gap, there's such an opportunity there. Let's talk a little bit about that with home ownership. Especially coming out of 2008, when Bank of America had, has a bit of a legacy coming out of that housing crisis and the lessons learned. And Black home ownership is still at, I think low since the 1970s. What are the opportunities there? What can Bank of America do? What can the industry do to say we can help make a difference?
Yeah, there's significant opportunities, and I'll tell you what, we got after this even before the pandemic. So in 2019, in April, we announced a commitment. We were going to commit to $5 billion and creating 20,000 new homeowners that hadn't had access to homeownership in the past. And we were doing that through low down payment programs, down payment assistance programs, and grants that we provided to help clients. You kind of fast forward to 2020. This effort is led by a great colleague of mine, AJ Barkley. She got to that goal 3 years early because that was a 5-year commitment we made. We looked at that and we said, well, let's keep going. So we tripled the commitment. Now it's to create 60,000 homeowners over 5 years, a $15 billion commitment. And we've made great progress. We've already got 24,000 homeowners, $6 billion in loans made, hundreds of millions in grants that have been offered. That's the opportunity, Karen, is to be able to create solutions that help clients attain homeownership. We know that homeownership leads to wealth creation, and so we believe that's foundational.
And you mentioned that program. I know we did write about this. It's with the Neighborhood Assistance Corp of America. I think it's pronounced NACA, right? We wrote about one woman who was a teacher, has a stable job, had a PhD, and couldn't get a home loan. And I think through that program, when working with you, she was able finally to get a loan. But you hear those types of stories, and they're literally heartbreaking. And you figure out, how can that be? You have a PhD, you have a stable job, and you can't get a loan. You mentioned the underbanked and the unbanked. The nonprofit, the Financial Health Network, says that 1 in 4 U.S. household is underbanked or unbanked. You just put in place Christine Channels, I think, who's now going to oversee a group of branches focused on low and moderate income areas. How is that going to make a difference? What kind of work is she going to be doing? Why do that kind of realignment?
Yeah, well, first, Christine's been with us for quite some time. She's actually been the leader and architect of our community banking strategy with another colleague, Alberto Garofalo. And now she'll have the direct oversight for these financial centers that are largely located in communities where we're able to better serve our low and moderate income and majority minority neighborhoods. And so Christine's charge, her mandate will be, what are we doing in those financial centers in terms of our engagement with local community leaders? I mentioned AJ Barkley earlier. She's got dedicated community lending officers. They work closely with those financial centers, holding seminars and education opportunities for borrowers who are thinking about home ownership but maybe feeling a little bit daunted by the process. It's making sure that all of our employees understand the unique solutions we have. So you think about the stat that you just gave about the 1 in 4. We created a solution a number of years ago called Safe Balance. And really, it's a primary checking operating account. But clients, when you're new to banking, one of the easiest things you could do is get yourself in trouble, potentially overdraft, not realize you've written a check and you don't have enough. This account has no overdraft. And so it enables clients to get into banking, get used to paying their bills. They get access to all of our capabilities, right? Our 18,000 ATMs, all of our financial centers, all of our digital capabilities. But it's a very safe account. We put all of our new students, when students are starting their banking, into this account as well. We've got 2.6 million, I think, people enrolled in that account today, and it's the fastest growing checking account we have. We announced at the end of last year that we launched a solution called Balance Assist. This is innovative. We're the only major bank who had announced this at the time. And this is, you had clients that are living paycheck to paycheck here, and they're falling short. And so they were either going outside the banking system to supplement that, or they were living consistently off of overdraft. What we did is we said, we'll create a small dollar short-term loan solution. They can borrow $100 increments up to $500 for a flat $5 fee. And then they pay it back in 3 equal increments over 3 months. That's the kind of innovation and solution that we need to meet clients where they are and help them bridge the gap, get to the other side. And so we're really excited about it. We've just kind of gotten going on it. We piloted it in the early part of this year and are just expanding it nationwide. But we think that that's a really, really important solution. And again, we talk a lot about high tech, high touch at Bank of America. They can apply for that through their mobile device. Very easy to get access to it and get it there. And then just one last thing is in terms of introduction to credit, one of the areas that we've really focused on are secured credit cards. So maybe you don't have the credit established to be able to get a traditional credit card, but you could have $500 in an account and then start building a credit history borrowing against that. We've got over 800,000 clients who today have a secured card. And then when they demonstrate the ability to manage that debt, they can graduate to an unsecured card. So we stay with them through their financial life.
So you touched on so many things that I was going to ask about, such as the rise of the purely digital banks, and also on the other end of the spectrum are those payday loan institutions, which we've also written about recently at Bloomberg, where they charge 500% interest rates for people who have no other options. They need a loan, and do all sorts of things to just secure a loan and find that you can never get out from under the terms. You're talking about some things that really are meeting customers where they really need it. They need these short-term loans that don't really lock them in and seem that they're easier to get. Who in the banking world is helping other people like you, helping your peers really understand what's going on in communities, understand how people's needs are changing?
Yeah. So, you've mentioned a lot of the solutions we've done. We think, candidly, one of the ways that we can lead is by being out there and declaring and making sure people know what we're doing and hoping that you'll see others follow. Clearly, we partner with a number of community-based organizations. You mentioned NACA. We've been a partner with them for decades, and they've helped us in a number of areas around homeownership. We're consistently partnering with other organizations. We've been engaged with Operation Hope for years. We believe that there's a good partnership between what we're doing as financial institutions, what we're doing in our locally based communities, and it's important the work that we're doing on the ground. So, I talk a lot about what we're doing digitally because retail, for the retail mass market client, I found that they really want to be able to transact digitally. We've got over 40 million digital users, and they're using it. I mean, the volumes are pretty staggering. I think in Q1 alone, we had Zelle is that network where you can transfer money to make a payment immediately to someone, and I think in the first quarter alone, we had some 13 million Zelle users who did 170 million transfers for $50 billion just in Q1. The intersection between digital and physical is what we think is really powerful. Last year, our clients scheduled appointments with specialists in our financial centers to almost 2.5 million times. In Q1, 800,000 digital appointments scheduled with folks in our financial centers. So if you multiply that times 4, you see that that's just growing. See, we think it's important. Create all the digital capabilities, because people say, I don't want to go to a financial center to make a deposit anymore, right? 85% of our deposits happen through automated means. But they also want access to advice and guidance and people. And that's when you think about the work that Christine Chalice is doing, focusing on our community bank. If you think about a lot of our specialists, you think about all the capabilities we have on the digital platform through Better Money Habits to educate clients. You've got to do all of these things. There's no one silver bullet here. And I said it earlier, meeting clients where they are. If you want to engage with me digitally, I want to make everything from educational solutions to our financial solutions available to you. You want to meet with me physically? I've got specialists in our financial centers ready to meet with you and connect with you on what your financial needs are. And then you've got to have the right solutions. So that's our Safe Balance account. That's the Balance Assist small dollar loan. We've had something going on for 15 years called Keep the Change, where when you use your debit card, you can just round up to the next dollar, and we deposit that in your savings account to build a savings pattern. 15 years, our clients have saved $15 billion. So it's all of these.
It's all of the above, but still, there still is that hangover effect, still that legacy of at least in the Black community, the fear of redlining, the fear of just not being welcomed and understood. Do you think that the industry is really doing on whole, and I know I'm realizing I'm asking you to speak for the industry, which I know is impossible, but I'm going to ask you anyway. Do you think that those dark days are behind us? Do you think that the banking sector has really moved on from those days? That it just is not going to stand. That a Black person going in to get a mortgage is going to get a fair shake. Going to get a loan is going to get a fair shake, and have that sense of confidence.
So look, I think both the industry and definitely specifically for Bank of America, we know that we won't tolerate that. Now, I do think we have to have vigilance, and we need to continue to invest to look for where we either see inequities or addressing some of the systemic inequities which are creating disparate outcomes. So, one of the things we didn't address, but last year, not only did we have a health crisis, but we saw a lot of racial and social issues that really jumped into the spotlight. And one of our responses to that was establishing at that time $1 billion commitment specifically focused on getting at long-term social inequality that had inordinately impacted communities of color in particular. We've actually since increased that commitment to $1.25 billion over 5 years. And it was important to us that this was different than what we already do. So to give you an example, we give $250 million a year to philanthropy. We wanted to now focus on specific areas like job skilling and reskilling. We wanted to focus on areas around unequal access to health and education. And we've made investments in minority deposit institutions. These are all things that we said we've got to continue to be vigilant. Yes, we've come a long way. We've made a lot of progress, but we still know the numbers tell us we're not where we need to be. So we got to stay after it.
You mentioned your 200,000, I think it is, employees. What's their role in all of this? When you look at your employees, how much do they hold you honest? And when you think about the employee base is going to be changing, I think by 2027, the majority of workers 18 to 29 will be minorities. When you look at your employee base, how much does that influence or affect your decision making or guide your decision making?
Yeah, so look, our employees hold us accountable. We survey our employees every single year, no matter what's going on. We want to know what we've done well, where you need us to focus, and making sure that we're soliciting that feedback. It's all independent, it's all anonymous. They can give us that information. I'm pleased that we have some of the highest ratings, that we've seen amongst any companies, not just in the financial industry. But that said, we have to continue to focus and drive there. One of the areas that our employees look at, and you talked about, is representation. So we're not waiting for the trends to come in population. We've been very focused on representation, and it's got to start at the top of the house. So Brian Moynihan, who's our chairman and CEO, also serves as chair of our Global Diversity and Inclusion Council, of which I'm a vice chair, in addition to my day job.
Yeah.
And I think Brian has really set the tone. And you look at it. Look at our board. Our board is 50% diverse. We've got 2 African American, including our lead independent director, Lionel Knoll, Hispanic Latino member. We are one of only 5 companies in the S&P with 6 women on our board. You look at our management team, 50% diverse with women and people of color. You look at our U.S. workforce, we have just under 50% are people of color. So we think our employees expect us to put our money where our mouth is in terms of looking up and seeing representation. Now, it's also in our hiring practices. We had a program that a couple of years ago we announced where we were going to do this Pathways program to hire 10,000 employees from low and moderate income communities, train them, get them good jobs, careers, and get them started on their way. That was supposed to be by 2023. We've already exceeded the 10,000, and we're just going to keep going because we think that just helps us develop and get good talent. And then I just tell you a last thing, and this is more anecdotal, but I worked almost around the clock on the Paycheck Protection Program last year. I asked employees to work holidays, weekends. I literally Easter, Mother's Day, Father's Day, July 4th. Our employees are working hard to save small business. What was amazing to me were the notes I was getting back from people. Here I am asking them to give up this time. They're dealing with all the stress like the rest of us are with the health crisis. And I got note after note saying, thanks for letting me be a part of this. Thanks for letting me help. Because they know we view it as our obligation, and they want to be a part of that culture.
So that leads me to, and we just have a couple of minutes, but I really do want to talk about your trajectory and the culture of a workplace that will make it attractive, that will make it someplace that people want to be, because I think that's really key. Because you can have all the programs you want, and you can bring everyone in that you want. Will they stay? Right? And that's diverse people, not diverse people. At the end of the day, you want talented staff. Moynihan just yesterday announced raising the minimum wage to $25 an hour. That's up $5 by 2025. Again, that's all part of retaining and bringing in staff. How do you not just bring in talent that's diverse talent, non-diverse talent, but actually keep them engaged? Yeah. We hear these phrases, supportive workplace, we have mentors, I take risks. What does that actually look like? What did that actually look like for you? You've been at Bank of America, I think, for 26 years. What does it mean to actually be someplace where you feel that support, where you actually feel like, I can do this? I can actually get this done. I can do my job. I can progress. I can move forward.
Yeah, no, it is. I'll try to pack it in quickly in a couple of minutes, but, I have been here for the better part of my adult life, and I've been given amazing opportunities. I actually originally started some 31 years ago in a management training program straight out of school and left briefly and been back for 26. And to think that I get to now run our retail business, starting out as a kid out of school in one of our financial centers, that's the story. It is, what is the career path I can have? So look, you have to do all the things. Brian announced, a couple of years ago, the intent to get to $20 an hour, and we got there early in March of last year. Now the announcement to get to 25. He's been consistent about things like, for more than a decade now, we have had no increases to healthcare premiums for our lowest paid employees. So we said, let's absorb that by higher paid employees, but we know that's something that makes this a better place to work. We've got employee networks that people can be a part of. We've got formalized sponsorship and training programs, and I've been a beneficiary of that have given me opportunities to move lines of business, get exposed to leaders both inside and outside of the company. And I do think that the proof is in the pudding. At the end of the day, what do you see when you look across this company in terms of the diversity of experience, of thought, and definitely the traditional diversity we look for in terms of ethnicity and gender in key roles and in key businesses across? And again, I think we continue to have work to do, but I'm incredibly proud of how we stack up.
And when it comes to looking for talent, when it comes to looking for the next generation of great young minds, um, is it all of the above? Is it going to different schools? Is it training programs? Is it starting even younger at high schools? I mean, how is it that we still hear that some people still say that there's a pipeline problem, that they wish they could hire different people, but they can't find them.
Yeah. There isn't a pipeline problem, and I really just think people have to dismiss that, and they don't have the right talent programs. We don't believe there's a pipeline program. We believe first and foremost we've got a ton of talent inside of our company, and we focus on keeping them here and pulling them through. That's by giving them the various opportunities. One of my colleagues who leads our preferred mass affluent business, Aaron Levine, created, along with John Jordan, a guy who leads our academy, a career path for people starting from the very front line. We call our tellers client service representatives. So being a CSR all the way up through, that people can see what are the prerequisites for roles, what do I need to do, and they can see that career path. So we believe in that. You definitely have to cast a broad net, whether it's different schools, taking people from different backgrounds and vocations. I've worked in wealth management, I've worked in administrative roles, I've worked obviously in our retail business, and it is definitely from different communities. Our financial centers and our employees come from different communities. We have to be hiring from those communities, and that's what that Pathways program was all about.
And those communities, being in those communities has actually helped you, it seems, has helped the industry think about products and services that otherwise might not have been created.
Well, that's right. You when you're a part of a community, you become part of the fabric of a community. Then you're engaged and you understand what are the things that we may need to think about or do differently. And Balance Assist was one of those solutions that came out of. You kind of look at this issue and you say, okay, when we look at financial behavior, what is it that clients are telling us they need? And look, you're going to test and learn to get it right. That's okay. We're not afraid to do that, but continuing to make sure that we're enhancing our capabilities and delivering solutions that our clients tell us, look, I need this to live my financial life. There's something really simple example. Last November, I think it was, we launched something called Life Plan. On your mobile device, you can just lay out a financial plan for your life. So what do you aspire to? Do you want to buy a car? Do you want to buy a home? Maybe you're thinking about how you fund education for your kids. You can do all of this in Life Plan. We just launched that in November. We got 3.5 million life plans created. Clients are telling us what they need, and we're going to keep creating solutions that help them get there, and then making available through our high-tech approach, digital capabilities, and our high-touch approach, all of our financial centers and our people to deliver.
So what's next for you?
I've got my hands full. I'm keeping really, really busy right now, taking care of our 33 million clients, and I'm having a ball doing it.
What surprised you the most over this past year?
Resiliency.
Yeah.
We tested the resiliency of this country, and we tested the resiliency of our own people. It was in the darkest days of the pandemic early on, because there was just so much things we did not know, and needing to move quickly and make decisions with speed. I collected some 15,000 colleagues from across the world to help me on the Paycheck Protection Program. So, it wasn't just within our business. We literally looked across businesses and we said, we need people to come, we'll train you. I mentioned John Jordan, my colleague. He stood up training remotely because, of course, we're all remote. And one of our colleagues who is in our tech group, Aditya Basin, he got Chromebooks and laptops out in the thousands to our employees to get them stood up and started. It was really amazing candidly, to be a part of that and see it happening, and then candidly to watch the U.S. consumer coming back. You're right. Some people we still have a ways to go, but we're seeing spend come back. We're seeing optimism come back, and we're going to continue down this path for recovery and growth because we really believe that the U.S. consumer, there's just so much room to run in terms of both what we can do for the consumer, what the industry can do for the U.S. consumer, and it's nice to start to see the recovery happen.
Well, it has been great talking with you. I thank you so much for joining me today. That's going to be the final word. Steve Boland from Bank of America. Thank you again. I'm Karen Toulon for Black in Focus. That'll do it for this week. Next week, we have the CEO of Coke-Wall. We're going to be talking about diversity and inclusion in the workplace all over. Thank you so much. We'll see you next week. Take care. Bye-bye.